And we are live. Good afternoon, Crystal. How are you, ma'am?
I am well, and yourself?
I'm doing great. Happy to be back healthy and present. So, yeah, yay, doing well.
Yay, yay,
Lots
yay.
of yays and whoops are abounding.
Well, I'm glad you're feeling better, and that's a good thing. And then it's the season, this spring, so allergies are rampant. And
Oh
even if
my
you don't know you had allergies, you find out that you have
God,
allergies.
exactly. But is
Yeah,
it not the season? Is it not always the season? I mean, there is something always happening.
always. There's some sort of season always. It's just how you
Oh,
respond to the always. So,
there you
what
go.
we talking about today?
Well, um, we are talking about, I believe, the article that you sent me. And I remember reading it and I remember putting together some thoughts. And then, if I'm not mistaken, and I might be, you had sent me another little quip about if this was the time to, shall we say, take risk off the table. And
Okay.
I think,
On what's going on in the world today,
yes,
and stock markets and
exactly.
401ks taking major
Exactly.
dives. Yeah, yeah. What we supposed to be doing right about now?
Exactly, right?
Retire
Really,
plan
Jevon.
advisor.
Exactly. Exactly. What you got now, right?
What you got now, retirement plan advisor? How you gonna help?
Indeed. Indeed. And so, let's get to it. I am going to read your bio, and please forgive me, but I did not pull it out beforehand. So I'm just going to grab it real quick here.
Oh, no problem, no problem.
And here we go. Keep it pretty close. Okay, so I'm going to introduce you, Crystal, and then we're going to get into it. How's that?
That sounds fantastic.
So, hello, everyone. Please let me introduce to you my friend and colleague, Crystal Mitchell. She is a business coach and consultant. Her name tag says that, business coach and consultant. That's pretty cool.
Uh-huh.
She's the CEO of Mitchell Business Solutions, the co-director of Recycling Black Dollar. She's a co-host of The Business Zone with Kristen Gilwood, another weekly online radio show. She's an instructor at Mount San Antonio Community College, a certified network for teaching entrepreneurship instructor, and a QuickBooks Pro Advisor financial strategist. Hey, Crystal, how you doing?
Hey, how are you today? Glad to be here. Glad you are feeling better.
Thank you. Thank you. Let's get into it.
All
So,
right.
the question before us is it time to take risk off the table? And of course, I have tons of answers for that. But I think so many times those of us as financial advisors forget that we're talking to different people, right? So, for example, if you're talking to someone who is at the end of their career, they're going to look at life and their finances and what's going on in the world, possibly in a dramatically different way than someone who is just entering the workforce.
Right.
Fair enough.
Mm-hmm.
So we want to talk to all of those folks, and I think hopefully we'll get to all of them specifically. But in general, we want to talk to all of those folks.
Okay.
So you sent the article to me. You had a chance to read it. What'd you think?
Um, again, yesterday was a time, and then today is a time, right?
Yeah.
And so, just from listening to the news and what's going on, and understanding just from been on this being the co-host with you on this show, is timing matters with your retirement plan, and so when something drastic takes place just before you're about to retire, 5 years out, it may be difficult to make that recovery. And there are a lot of people that are very, very nervous right now because they know retirement is on the horizon, and also all the chaos with what's going on in the country right now. They're scared. I mean, they're not even nervous now; they're scared. And so, yeah. So when we talk, when we look at our articles and stuff that we read, and at that time, yeah, that makes a whole lot of sense, right? Until you're smack dab in the middle going, wait a minute, I was retiring in 2 years. Now I just lost, a quarter or a third of my plan, and so I don't, it doesn't really have time to recover. So what does that look like for me now?
Great. Awesome, awesome points. And you hit them right on the head, right square on the head. So let's dig in. I think one of the
Mhm.
first things you said, well, if we can go backwards maybe a little bit, you said right now, if you're in that state where you're about ready to retire and you've seen your portfolio drop dramatically, what do you do if you were looking to retire in the next couple of years with a nest egg of X, and now you're seeing that dramatically less? What are you going to do? What
Mhm.
should you do? And on, I would say uh, that's different than a person in the middle and different from a person at the beginning. So let's talk with this person.
Okay.
The first rule out of the gate, in my opinion, is that you shouldn't let the market determine how you invest. You
Mm.
shouldn't let what's going on in the market determine, at least in your 401k plan. Outside your 401k plan, things are a little different, and I'm going to break
Mhm.
that down.
Okay.
Inside your 401k plan, um, the key to success is to have a well diversified portfolio with the right mix of stocks and bonds that's appropriate for you
Mhm.
to dollar cost average and to rebalance on a regular basis. Now, why do I say that? Because you've heard me say that before. But
Mhm.
I would say that this time right here, and people are not going to like this, but this time that we're living in right now, the tariffs that are going on, the market ups and downs, this is exactly why we need to have a well diversified portfolio. So often clients will say to me, okay, Jevon, I can take the risk. How do I make some money? And I say to them, well, let's have a well diversified portfolio with the right mix of stocks and bonds in it for you. Let's do that first. Because if we don't do that,
Mhm.
then it's very possible that you're going to miss out on some pieces of the market. And when we say
Okay.
well diversified, we don't mean have the same kind of stocks with multiple advisors, multiple companies, right? So, for example, one of my clients showed me that they had a target date fund. They had a 2025 target date fund. I'm sorry, a 2030 target date fund, a 2035 target date fund, a 2045 target date fund, and a 2050 target date fund amongst individual investments. Perhaps an argument can be made that having a target date fund with an you know a impetus or a focus on
Mhm.
a particular market is a good thing for someone to do. For example, if you have a target date fund and you decide, oh, I like the idea of beefing up the amount of small caps in my portfolio, so I'm going to have a target date fund plus a small cap fund. Okay, I can understand that. However, what most people don't understand is that if you have a 2020 or 2025 target date fund, let's go back. If you have a 2035 target date fund and a 2040 target date fund and a 2045 target date fund,
Mhm.
that's all the same fund.
Ah.
So you're really not diversifying. You're just investing in different amounts in the same investments, because the way target date funds work is they choose the same, let's call it 18 funds, and dependent upon the level of, or dependent upon your age and when you're going to turn 65, they reduce the amount of investments in stocks or more volatile investments into bonds and more fixed income assets. So you're not really diversified. So all
Mm.
that to say is we need to diversify. So when the US market isn't doing well, we used to say that the international market might be doing better or different.
Mhm.
We used to
Mhm.
say that.
Mhm. Mhm.
For a long time we said that. And then we stopped because it seemed like when the US market wasn't doing well, the rest of the market in the world wasn't doing so well.
Right.
Now I think we're getting back to that. Now I think when the US market starts to go down, the rest of the market, the international market, talking about countries in Asia, Europe, Southeast Asia, uh, countries around the world, they're having a different economy, right? I
Mhm.
think because of the tariffs, those folks are starting to shall we say, tear away from the US market more than they did before. So now you definitely want to have a diversified portfolio for the future, especially because now you may see that when one goes up, the other one goes down. So we want to be able to take advantage of all of those. Okay, well, that's for the future. What are we going to do now? Right now, Jevon, what are we going to do now? My portfolio is losing money. Every time we have a tariff, I'm losing money. Every time the market goes down, I'm losing money. And I want to retire in the next couple of years. What are you going to do? Well, we got to take that risk quiz, find out where you are. We got to do that. Okay, Jevon, I don't have enough money. What am I going to do? You've got some decisions to make. What do you do? One of them might be, should you work a little bit longer? I can't do that, Jevon. Well, you might need to do that, right? You might need to keep that health insurance. You might need to put in a couple extra years at work. Can we reevaluate what retirement is going to look for you like for you? Is it time for you to get that secondary job that you were going to get when you were in retirement? Is it time to start that early? We have to take a look, and the expression is the adult has to be in the room. There are lots of things that you want to do, and there are lots of things that you really need to concentrate and focus on. So your financial advisor, and remember, I always say, especially if you have a target date fund, 5 years before you retire, speak with that financial advisor to transition you into decumulation while you're still building up those assets at the very end. And so right now is a great time to talk to a financial advisor and say, here's where I am. What should I do? Back in 2009, a lot of my clients, a lot of my coworkers, let me put it that way, a lot of my coworkers looked at me, and unfortunately they said things like, we did everything we were supposed to do. I still lost money. Now what are you going to do? In 2010, the S&P returned 16%. So those folks that were able to buy cheap in 2009 made a serious comeback in 2011. But they had to go through it.
Yeah.
Right? And for some of my friends that decided, oh, the market is tanking, we're not going to put any more money in the market. Those folks missed out on the gains that came in 2010. And so when 2011 came on, they did not have what they could have had.
Right.
So, we all say hindsight is 2020. Well, in that situation, having a well-diversified portfolio is a great way to go. So you should always do that. And we always say in my line of work, make sure that the risk component is appropriate for you. Because the last thing in the world you want to do is be stuck looking at your portfolio, hoping that it's going to be okay. That's not the way you want to live your life, right? Right. So,
and it's so volatile today, because today, I mean, just a comment can send stuff just sky high, and there's so many comments being made from Washington that is really the one that's being manipulating or triggering every day. I mean, today I think they're talking. He was talking about Powell is the reason why interest rates won't come down. If you do interest rates, and I think that here's the other thing. I think that there are certain powers that be, I'm not going to say names, certain powers that be that really does not have a full grasp of economics. And I think they make comments that is not really banked upon or based upon real realities. And so, they just have their purpose of why they're doing whatever they're doing. But right now, everything is just so volatile with this trade war that's going on that has become more retaliatory. It's almost like watching a football game, right? I'm going to take this and you're going to take this, and then I'm going to make that point, and then taunting, or better yet, I think it would be probably a world weight uh, uh, in the ring with a fighter, right? I'm gonna take a jab. You gonna take a jab. I'm gonna take a jab. I'm gonna double my jab, and at the same time, there are other entities that are being affected by this this thing that's happening.
Yeah, I tend to be a optimistic person, and so I want to think that someone who has the power, as our current president, really has the American interest at heart. Um, I'd love to think that. I'll just say it right here and now. I would love to think that. Um, I don't. I really don't.
and,
And
and and neither does a whole lot of people,
right? Yeah.
and
And
including.
so I don't know. And so I think part of our issue is that whatever this president is trying to do, I
Mhm.
believe he realizes he's got 2 years, at the most 3 years, 4 years to get it done. And so for him, drastic changes, drastic moves uh, are less important. The way that the things that he does, the way that that affects regular Americans, even if they support him, is not very important to him. All that being said, what you and I have the opportunity is to do is to look at right now, and
Mhm.
how do we set ourselves up so that we can win in the future?
Right.
Because if we're winning right now, that is, we had a well diversified portfolio with the right mix in stocks and bonds, and we were rebalancing our regular business. If we were doing that, then our portfolio is not as bad as it could be.
Right.
But talking about right now, what do we do? I'm going to say the world is going to get even more complicated. So, therefore, having a well diversified portfolio is important. And let's really focus on diversification, because if I could tell you what asset class was going to be on top next month and what your portfolio was going to look like in 2 years and what you need to do in order to make sure that you're on top and that you're going to be okay in the next 3 to 5 years. If I could tell you that, I would not be on this program.
Yeah. Yeah.
Right? I just
Mhm.
wouldn't. I'd be making a lot of money. So nobody can do that. We just can't. That's just not the way that the world works. And you can't get out of the game. You can't just say, "Oh, you know what? I'm not going to deal with that. I'm just going to go over here," because now things are so close, right? If interest rates go up, who's going to buy your house? And if somebody can't get a job, then who's going to rent your house? So you can stick your head in the sand, or you can get a little bit educated and understand what's going on and do your best to make sure that all your eggs aren't in one basket. You got to
Mm.
diversify.
Okay.
And then you got to figure out the right mix for you, because you don't want to be, checking all the time. But I would say better than yet, and my first quote is the one that number 1 and 2. I hopefully you were able to see when we were reading
Mhm.
this, but it's a quote from Warren Buffett, and it says, "Be fearful when others are greedy, and be greedy when others are fearful." I believe that's a
Mhm.
Warren Buffett quote. If
Mhm.
that's not a Warren Buffett quote, please don't send me cards and letters. It sounds good.
Yeah.
I believe it's a Warren Buffett quote.
And I think
Um,
he has. I've been listening to that one. I mean, because he's been doing this for a very, very long time, and I think he has a very rational grasp on life. I like his business philosophies, and I try to emulate, or if I'm looking at, I kind of go to him when I'm looking for some advice, because he's been doing this a long, long time, and he's been able to maintain his wealth over that long period of time, and he doesn't do anything erratic.
mhm.
He's
Well,
very
I think
steady.
you're right, but let's break it down just a little bit, if we could.
Okay.
So, right here now, today, I'm losing money. I'm afraid of where my retirement. And to be honest with you, there's a whole lot of us as Americans. When you get right down to it, there's a whole lot of us around the world that are losing money and are fearful of our retirement, and we're close.
Mm.
What are we going to do? Well, and we don't have Warren's money. You
No, we
know,
don't have Warren's money.
we don't have Warren's money. I mean, push come to shove, if we had lots of money and we lost some of it, that would be dramatically different if we have a little bit of money. So Based on that quote there, be fearful when others are greedy, and greedy when others are fearful. Okay, so I
Mm,
think we're at that point now where a lot of people are fearful. That means a lot of people are looking at what is rather than what's really going on, and without being conspiracy minded. And
okay.
what's coming up, right? So let's get out of the conspiracy. So we got a lot of fear out there. So how can we be greedy now? How can we take advantage of what's going on now?
Well, I think you said it. If you're taking the personal out, right, and you look at your to see exactly how you're balanced with foreign trades, right,
Right?
and especially in areas China, Japan, um, Brazil, because if they're trading, if they're fighting tariffs in America, what are the products that America have been exporting, and now those governments are saying, I can go to Brazil, I can go to Australia, they got beef and steer there,
Mhm.
I'll go
Yep.
there,
Yeah.
and they're gonna
Australia's got beef.
they
We're not
got
that.
beef, right?
Where's the beef?
Australia's got beef, and so which is one of the things that Japan, I think, did. They went to Australia and they struck
Yeah.
up a deal with them,
Yeah.
and so then now maybe you need to be looking at those countries or foreign trade, and might be the place you need to go. Now, I know, and I've always been told that obviously as much pension plans can't move that fast. You can't get something out of it that quick because it's not just your little individual investment there. It's everybody that's in that, whoever they're trading with, right? I mean,
Mhm.
whoever they're investing in. But you can do that on your own personal side, right?
Yep.
You can set up a counter account that's your personal investment, and maybe if you then you got a little bit more flexibility, and
Mhm.
maybe make up that difference somewhere else, right?
Mhm.
Take some allocated. Do your research though, and talk to someone that understands the stock market and that are licensed and professionals that can guide you in the right direction.
I would say in support of that, I would say that I personally tell individuals that come to me to say, "Hey, how should I diversify my portfolio?" I always say to them, and I have since the 90s, over 50% of your investment options are outside of the country.
Yeah,
So it's prudent to have 50% of your assets that you're investing into your 401k outside the market. And I think that's appropriate for an IRA, and I think it could be appropriate for a portfolio outside of the US, right? So we should already be doing that. And I would say that that's going to react differently to the tariffs than, let's say, an American company. Not necessarily better, but different.
yeah,
Different. And so that's a way we can diversify, right? However you want to do it. Talk with your retirement plan advisor, give me a call, whatever it is. Let's take a look at that risk tolerance and let's make sure that we're good with the risk tolerance. And I have a sneaking suspicion that the situation that we're in now is not going to get dramatically better tomorrow, right? So
mm,
we may have a couple of years of this, and hopefully we won't have the R word. But even if we do, that's something we want to get ready for, right?
yeah,
If someone says that R word, and we got to go through that, what kind of changes are you going to make to your portfolio? Because your risk tolerance should stay the same. It shouldn't change based
yeah,
on what's going on in the market. Your risk tolerance is based on your age, how you feel about what's going on. And let's get back down to it. Most people I talk to say, I don't look at my 401k, I just leave it alone. And I say, look at your 401k so that you can use it to take advantage of what's going on. Because if you
yeah,
don't use it to take advantage of what's happening in the marketplace, if you don't think about it that way, then you're going to get smacked.
Mm.
I'll just say it right here and now. If you're going to be a passive investor and just not look and not care for 20 to 30 years, you're going to end up in a place you don't want to be,
Mm.
right? So I'm
Yeah.
not saying you should time the market. Do not time the market. But rebalancing your portfolio on a regular basis is a good thing. Making sure that the risk that you're willing to accept is the risk that you're taking is a very good thing. And rebalancing your portfolio that's well diversified does that for you.
I think that's good. And I also think that, now is the time to, you can go to the Wall Street Journal, you can go to, um, I mean, even in Yahoo Finance, but there are people talking, right? And these are professionals that are in this industry. Probably a good time to listen. They're studying this stuff all day long right now. I can imagine if Wall Street, you ever saw that the movie Trading Places with
Yes, I did.
and that scene where they're selling the futures
Yep.
and all of they're just going nuts, phones ringing, there's just complete chaos happening in the
Mhm.
stock market in Chicago. Well, I imagine that's probably what's happening right about now.
We're all trading some places. Is that it?
Yes,
Maybe.
there's trades in places possibly, but I
Maybe.
also think that the traders are getting all kinds of ulcers and everything right now because they can't keep up with it. But there are some people out there, professional financial analysts, that are really, mainstays in the industry. They've seen many ups and downs and fluctuations, and just reading and keeping up on the information that's out there, so that you, at least, if you're going to make some decisions, you're making decisions based upon, and not just one person. You kind of look at it overall, see who are the top folks out there, and um, that are reliable, and then you make your decisions. I don't think you should panic and just start pulling money out, and even in your private, but you should look and see, there's some stock that we may have invested in that at one point was like a couple weeks, it was about a month ago, Nirvana was like, oh yeah, everybody go do that. And then you're like, whoa,
Nirvana or
wait,
Nvidia?
Nvidia.
Yeah.
Yeah, it was like, because it's like everything has a season, and so you might want to look at that. But I think, yeah, you can do some things in your personal that may be able to help you in your own individual one, that may be able to shore up that difference, maybe.
Not a bad plan. I think you're absolutely right. I am what they call a contrarian. There are different types of investment professionals out there. I happen to be a contrarian, which would suggest that whenever the market is going down, I see opportunity rather than pain. So
Yeah.
when the market goes up, I see opportunity rather than pain.
Pain. Okay,
So
that's
I
a good
think
thing.
yeah. So coming from my point of view, I'd rather look at where the puck is going rather than where the puck is with
Mm,
regard to winning the game. So,
okay.
and that's appropriate for me, and I'll just let
Mhm.
everybody know that that's appropriate
Right.
for me. That doesn't mean that it's appropriate for everyone. And when you get right down to it, all kinds of people make money in the market, and they're not just contrarians. So, that being said, if you're one of those folks who needs to follow the market to see how it's going, if that's your deal, then I would say find an advisor that knows how to do that and do it successfully. Right?
Mm.
Right? If
Mhm.
you're one of those folks that wants to do the opposite of what the market is doing, that is like Baron Rothschild said here, the time to buy is when there's blood in the
No.
streets,
Yeah.
even if it's your own, right? If that's the kind of person that you happen to be, which is the kind of person I am, then you're looking at this turmoil as an opportunity to grow, as an opportunity to gather assets. Because when the when everything shakes out, you're going to make money, right?
Mhm.
Right.
Mhm.
So, you make money on your house when you buy, not when you sell. So, if that makes sense to you, then this is a golden opportunity. We rarely have opportunities like this, right? So
Mhm.
how do you take advantage of it? That's the question. How do you take advantage of now, right? So
Mhm.
that's those are the two basic things that I would say. And I think finding someone who is a contrarian and just straight up ask them, are you a contrarian? Right? If you
Mhm.
are, then what would you suggest? Are you a person that follows the market? If you are, what would you suggest? Are you someone that only deals in real estate?
Mhm.
If you are, then what would you suggest? And we all have something different. I think some of us get tied up in, okay, well, who's got the best idea? And why is this one better than this one? And how do I evaluate that? And, unfortunately, there are as many answers as there are questions.
Mm. Okay.
There you go. There you go.
Yeah. But yeah, we just it's some crazy times right now. So
There are. So if I was going to end this on a positive note, and I will,
okay.
um, I would say who I would say, first of all, let's bring back Don't Be That Guy. And second of all, I would say, as a contrarian, this is an opportunity. And talk to you, whoever it is that you need to talk to, that will let you know this is an opportunity and it's going to be an opportunity for a while. So, for those of us who didn't buy anything and we're running around getting our businesses started and having our babies and doing our deal and paying for dogs and stuff, and we just forgot that we were going to get old until we hit 50, for those of us like that, not me, for those of us like that, this is a golden opportunity if you're a contrarian, right?
Okay.
It's also a golden opportunity if you're one of these people that sort of follows the market. You just have to figure out how to get that done. So
Yeah.
I would say for all of our listeners, don't worry about this market, take advantage of it and do that in the way that works best for you.
Right.
Okay. I think that's what I wanted to say.
Okay. I think that's good advice. That's good advice. And just the more knowledgeable you are, I think the better off you are anyway, right? And not just don't take you know you got to do your own research. And I think that's everything in life today. Don't just listen to someone that you think may be an expert in that space. Hear what they say and then go back and research it. We got the best tool in the entire world right here in our hands, right? And you can get
We really do.
multiple ideas and also advice. You can
Sure.
compare it, and you can even see a historical timeline
Mm-hmm.
on what they've done in the past. And
Mm-hmm.
so use that tool to ask questions. No question in the internet. No question is stupid because there's an answer for everything out there. And see what you come up with your own research, and then you make your decisions based upon that.
I don't think I could have said it any better. I think you're spot on. You have to do your research. However, from the other point of view, I have to say that sometimes people just want someone to tell them what to do.
That's true.
I mean, you get to the
Hmm.
point where I just don't know, right? You just, and you can do the research. It makes no sense to you. Who are you supposed to listen to? Who is going to be your savior? Who's going to be the one that tells you how to do whatever it is you need to get done? And, um, and I think you can know where I'm leading with that, right? That's part of how we got to the situation we're in now, where we trusted the wrong person in some situations.
Hmm.
Some folks would say we finally got the right person in and we finally got somebody that's getting it done.
Hmm.
Right? Some people would say that, and that's fine. And then some people would say, oh my goodness, ooh, this ain't the way it's supposed to be. How's it go? Mama didn't say there would be days like this,
They
right?
did. Right, 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 right.
So I think you're right. We have to do the research, and you got to take care of yourself. You just have to. And I'm sorry to say that, but this isn't one of those situations where you can just have somebody just do it for you. If you
Yeah.
have that situation where you've got somebody doing it for you, if you have that, then I'm trying to say this in a very kind way. Um, you don't bitch. That's, you know, stuff is going to happen and you're not going to know why. And the way this thing works, even the best, right,
Yeah.
are going to miss the ball. Um,
Exactly. Exactly. Yeah.
it is.
But me from a financial standpoint, like when I'm looking at a company, you know, you go to, and especially in the stock market, all of them are required every quarter to divulge what their holdings are, what their assets are, what their financials are, and what the future of their company is, right? And so do thorough research, just due diligence. It's called due diligence in my business world.
Yeah. Did
You do your due diligence, and that is the way you find out what you need. Now, of course, if they're not generating revenue, um, may laying off massive people. You might want to do some thought, some deeper diving at that point.
Yeah, well, most folks in retirement plans invest in mutual funds, and
Right.
each
So,
mutual fund has between 50 and 150 investments in it. So you're already diversified there. If you
okay.
chose one mutual fund, you're already diversified. So the good thing about that is you have professionals that are looking out to diversify where it is that you're putting your money. But as an
Mm,
advisor, I would say let's even diversify those guys, right? Let's add levels of diversification there. So if you're not someone who's very comfortable looking at financial statements, if you're not someone that's comfortable trying to decide who's going to put the baby seat in their car and is that going to make that car safer, but if that's not your deal,
mm-hmm.
then take a look at the professionals that do this. And then next week we can come back and talk with you about, okay, when you do choose a mutual fund, how do you choose between all
Mm,
20 of them that you need to invest in,
right.
right?
Exactly.
And
Mm-hmm.
then we're not even going to talk about how do you choose. There are over 7,800 stocks traded on the New York Stock Exchange. So the chances that you're going to find the 10 best, in my opinion, pretty slim.
Mm,
Pretty slim. So
okay.
what tools can you use to figure out where you should put your money? So we can talk about that
That'd
next
be a
week.
great conversation. Yeah.
We can talk about that next week.
Okay.
So I tell you what, right now we're about to go over time. I'm gonna read your bio, and then
Mm-hmm.
should I let you have the last word?
No, I'm gonna let you have the last word.
Let me have the last word. All right,
Yeah,
cool
I'm gonna
thing.
let you have the last word.
Okay. So, everyone, this has been Conversations on the Patio with Crystal and Jevon. Crystal is a business coach and consultant. I'm going to read her bio. She's the CEO of Mitchell Business Solutions, co director of Recycling Black Dollars, co host of The Business Zone with Crystal and Gilbert, a weekly online radio show, another weekly online radio show. She's an instructor at Mount San Antonio Community College, a certified network for teaching entrepreneurship instructor, and a QuickBooks Pro Advisor financial strategist. Hey, Crystal, thanks for joining us on the show. I'm Jevon Thomas, retirement plan advisor. And my last word is times are tough for some of us. Times are going to get tough.
Mm,
Times are going to get scary. Times are already scary. And the best you can do is stay positive, take care of one another, and make sure that you see opportunities. Look for the
okay.
opportunities.
I like it. I like it.
There we go.
Okay.
Great to have you again. Always an awesome conversation. We will see all of you next time on Conversations on the Patio.
All
Bye now.
right. Bye, everyone. Have a great weekend. Hope you had a wonderful resurrection or Easter Sunday, however you celebrate. And now we're really into spring.
Hey, spring.
Yay!